Here we'll go a little deeper into the HTML report, the famous or infamous HTML report. We go back to our list. You look at one of the funds there, Fidelity Canadian Large Cap, and you can access that report in two ways. You can right click and go here in Security Report. And in the Security Report, you can see the Morningstar Report HTML, meaning that it is available in a web way. It is an interactive HTML, meaning it's a language used in the web. So you can click on that, or more simply, you just click on the fund. When you click on the fund, it is the default report. So you click on that. You have a nice, clean, full-page report, and of course we see the title, we see the price, the last price of $40. The 1 day total return, if it means anything, it has 0.44% down. We can see the star system. It's a 3-star fund. It's in Canadian dollar as of February 28th, 2018, and then the total trailing the yield. So the yield here is not the yield, it's not the rate of return. The yield, of course, is the dividend that the fund has paid. So in the last 12 months, the trailing 12 months, the fund hasn't paid any dividend. That's okay. It's not good or bad, it's just an information. The load is, there is multiple, and if you leave your mouse just over, you can see the different way in which you can buy that fund, and you have low sale, front end, deferred, so it's pretty interesting. The fund size, of course, is $5.1 billion. The managed expense ratio is 2.5%. It is a commission-based advice, and the turnover of the fund, a lot of information just on the first line. The turnover means that 79% of the asset is churned into a year. So within a year and a half, all the asset has been sold or resell and stuff like that. So there is a lot of movement in that fund. Sometimes they may, let's say the Royal Bank, they may have the Royal Bank as a stock, and they can keep it, but all the other stock can move a lot more, buying and selling. So they calculate the turnover. The status of the fund is it is open, meaning that it can take still more money coming in. The minimum investment is $500. There is no fixed distribution. It has been in effect for the last 30 years now, February 1st of 1988. So it is now more than 30 years old. It's not for the high net worth customers. It is the category that is important, because that category here is what will determine, give the star system. The star rating is within this category, though Canadian focused, and the yield of the rate of return since in the last 30 years, not bad at all, 9.08% per year for the last 30 years. And the investment style is large blend, meaning that it has mostly, because it's a little square of 9 boxes, just the one is black, is that most of the stocks contained in the fund are large cap, and it's not value based, it's not growth based, it's more blend. So it's a blend of the two kind. Then what's nice is that because it's an HTML interactive report, you can go here and you can, by default it is set on the 10-year, but you can go here on the 5-year, 3-year, 1 year, and you can see the fund perform, or in this case underperform its category and its index. So in this case, we compare it to the S&P TSX Composite Index, and we compare it to its category. And in the last year, not so good. In the last 3 years, not so good. Better in the last 5 years, and a lot better in the last 10 years. So more on that later on. So it is very, very, very powerful. And of course, if you take your mouse and you can see all the information on the screen. So very powerful graphic. You have your risk measure. So the risk versus the category is average, and the return is average, and this is why it's a 3-star. If it was above average, it will be more of a 4-star, but the return is a little bit more than average, so that's why it is a 3-star. Right, let's leave it at that. The style map we see here, it's a blend, but we can see the universe. So we can see it's just it has some medium cap and some great giant cap, and it can go from value to growth, but it is the mean. It is just an average. That's why they put just the one dot on the matrix style. The performance here, you see year to date, until 10 years, they show you the growth of $10,000. The fund, and here you will see that a lot in the different reports, the plus/minus, they calculate for you what the fund has done compared to the TSX composite. So year to date, the fund has done minus 228, but the S&P has done worse because the fund has done better by 2%. The last month, the fund has done minus 0.73, but the S&P has done 2.8. He has done the fund has done 2.2% better than the S&P in the last month, but in the last year, the fund's return was minus 1.79. That is minus 5% if you compare it to the S&P. On a 3-year basis, the fund has underperformed, but on a 5-year basis, the fund has overperformed by 2% the index, and in the last 10 years, the fund has overperformed the index by 3.85%. So that's, at the beginning, it's a little tricky because it's not the return of the S&P TSX, it is the comparison of the fund with the S&P, and when it is a plus like this, it's good. When it is a minus, it's not good. The same thing can be said here for the category. You have plus and minus versus the category. In the year to date, it's underperformed. 1 month, it has overperformed. On a 1-year basis, it has really underperformed. 3-year and then. And the percentage rank into the category. So usually we see quartiles. Here it is centiles. It is let's say here is 62% of the fund has done better than it. So it is in the 62% top. That's not good. It's less than average. Here it is in the top 10% for the last month, but a month is not very important. On 3 years, that where it is not. I don't know what happened to that fund. In the last 3 years, its return is 81%. Just 19% of the fund has performed worst. 81% of the fund in the category have performed better. 81% of 535 funds. So it's very much not very good. On the 5 years, it is 42, just above average, and that fund has made its reputation. There is a good reason. In the last 10 years, that fund is in the top 13%, meaning that 87% of the fund has done less, but he is in the top 13% out of 212 funds. So on that category, there is just 212 funds that have 10 years. And if you look year to date, there is 740 mutual funds in that category today. So that's almost 500 more than there was 10 years ago. A lot of information packed in just this. Asset allocation here, you can see we don't have any short position, so we see all the long position. There is some U.S. equity in that fund, international and fixed income. So it's a Canadian equity fund, but just 47% of the fund is Canadian equity. The rest is U.S., international, and fixed income. So it's not a pure play on that. You have the Morningstar Sustainability Index. That's rather new, last 2-3 years. It is not Morningstar that calculates that index by itself, but it has a Sustainalytics. So the company is Sustainalytics, and Morningstar buys the data from that company, and they match it with everything that the fund has. So let's say that Rogers Communication has a good note and Fairfax has a bad note, and so on and so forth. Morningstar will calculate the mutual funds as far as the sustainability index. It is environment, social, and governance. So sometimes the fund does not have a mandate. See here, the fund does not have a mandate to be sustainable, but and it proves it because it just have two. It's below average, so it means that it invests in companies that are not the best corporate citizen. It may not be important to you. It can be important for your customers. Who knows? Top holdings of the fund, of course, that's a standard. We can see the weight here. The little sign just before it means that the mutual fund has decreased its exposure to those in the last month or the last period. And we can see here the weight. We can see even the last price of those shares, the daily change, and the 52-week range of the price share of those. It's pretty interesting information. Maybe a little bit more technical, but it is still there. The top sectors represented in the fund. So we see it's more of a financial, consumer, technology, and you can see the category and the fund. So we can see if the fund really managed or not here. You can see that the category is 7.6% in consumer defensive, but the fund has 19%. Here you can see technology, the category is 10%, but the fund is 15%. So we can see the fund has not performed well, but one thing is for sure, the manager manages because he takes risk and he takes position. Sometimes it doesn't pay off, but still. And then here you see the dividend and capital gains. So you can see the capital gains, interest, and Canadian dividend. Everything is in here, and the distribution total. And as it was stated at the top, there was no distribution in 2017. Also one of the best report to print, because if you have been around a little bit of Workstation and you have printed reports, they're not that great. Okay, I love Morningstar, I love everything, but the mutual fund report, this one on screen is nice, but if you print the full report, it will give you a lot of information, not very user-friendly and graphical. But if you go into the HTML and instead of printing the full report, you print just this tab, if you click it, in my opinion, it is the best looking report you can have with Workstation. The other ones, I will show them to you because it is in the course, but they're not the best looking. This one is the best looking. So you will have all the information. I will not go through them again, but you have all that laid out on a one page, and I think it does a great job. Doesn't have everything, but it's just good enough for you to present to your client. Okay. And because it is in the HTML report, you have all those tabs. So we were just on the tab 1. If you go on tab 2, you have the Analyst report. Analyst report, it is 1 out of 10 funds that have an Analyst report. It's nice when we have it because it is Morningstar's assessment of the statute of the fund. But in this case, it's not that this fund is not covered by Morningstar. It's not because it's bad or good or whatever, but it's just not the case. Here in performance, you dive more into the nitty-gritty of everything. You see more graphics. You can see here the quartile year by year. You see the calendar year return compared to category and stuff, but more in details. And all the trailing returns, day, week, year, and stuff like that on a daily basis, on a monthly basis. You can even see them on a quarterly basis. It's a bit much as far as information goes, but it's there. You have the portfolio if you want to get to dive deeper into the portfolio analysis, and you can even change the benchmark here. They are proposing one to you, but you can even change the benchmark, and then you can see the holdings in the fund. You can see the turnover, the category average turnover, okay, the number of stocks, so just 40, number of bonds, the assets in the top 10, so depending if you are a believer or not of the focus or concentration. And then you can even see the holding, how they compare to the risk return matrix. So that is the, and they are playing with, the more it's big, the more it has place in the portfolio. You can see it on a 1 year, 3 year, and onto a 5 year basis. You can see here that the gold shares have dragged the return down. So if there is something, I think, in the fund, it is that the Spider Gold shares, the 5 year total return are -4. So maybe the manager has want to cover itself, and because I have seen that fund before, and I have seen the returns are very disappointing. And now I think I have an idea, because you have 8.8% of the portfolio into gold, and that may be a reason why that fund has not performed well. And then you have the premium detailed view of every top 15 holdings with all the details you want. So that's nice. If you want to be very, very technical, you have the detail, you have the basic, you have the number of shares owned, the country it's at, the year-to-date return. It can be very, very helpful when you want to dive into a mutual fund and you want to know it better, and if you want to sell it or you want to attack it, depending of your point of view. You have the tax analysis, of course, the pre-tax return adjusted, because of course it depends on the dividend, the ratings and risk as far as Morningstar goes. So we see the low, average, below, and stuff like that. And we see that on a 10-year, of course, it is a 4-star. On a 5 years, it is a 3-star. And on a 3 years, it is a 2-star. So you can see how it can move over time. And in that case, we can see why. Okay. And we can see the management, of course, who is what and where, and the phone number and the website. In this case, very easy. The expense compared to the category, and here we can see the expense. It hasn't moved very much, just a bit, and they were 256 and now they are 250, just some points. Okay, and we see that there is the administrative maximum is 0.28, the management is 2%, and that's why the 2.5 is there. Not much to say there. And if you want to purchase it, of course, all the information, of course, you want to have. So that is the HTML. It's the biggest return. My number one advice on this report is to print this tab. It will be your best printout that you can give to your customers.